Dude, what's going on? Welcome to my channel. Guys, today we're talking about the crypto tax beginner's guide. We're talking about how do you file for your crypto tax and what does the crypto tax entail? What is it about? How does it work with the crypto, right? So we're gonna go over this with you guys, and for those of you guys who are just finding this channel, guys, leave a like, comment, subscribe, hit the notification bell for future uploads on this channel, and also road to 1,000 subscribers. Help join in this community where we're trying to learn more about what the crypto and the metaverse has in store for people who are new, people who already know everything that's going on, and they just want to be up to date with new projects coming out, new things that are coming out. This channel is all for that, right? Bringing you new projects that you probably never heard of, or if you heard of them, you know little about, and I want to bring that to you guys, as information for you guys to go ahead and take in. All right, so we're talking about crypto tax. How does it work in US? All right, so shout out to tokentax.co. This is their blog that they wrote for the crypto tax in US. So is crypto tax in the US? Yes, it is. So proceeds from crypto trades are taxed as capital gains. So the length of time you hold a crypto asset affects how much it is taxed. If you hold crypto for a year or less, it is a short-term sale. If you hold crypto for more than a year, it is a long-term sale. In the US and many other countries, long-term gains are taxed at a lower tax rate, making them advantageous for investors. All right, I want you guys to keep that in mind. All right, when you have a crypto taxable event like a sale, trade, or purchase of goods and services, you recognize a capital gain or loss. Per the IRS, the holding period begins on the day after you receive an asset. So the federal short-term crypto capital gain tax rate is the same as the tax rate for income. Currently, it can range from 10% to 37%. Depending on your total income. Long-term capital gains tax rates typically range from 0% to 20%, depending on your total taxable income. All right, so hopefully, guys, that made sense to you guys. So, guys, it's the same as the tax rate for you guys' income when you guys work a regular job. You guys, it's the same. And it ranges from 10% to 30%. So keep that in mind as well. All right, so short-term capital gains tax rates. Note that these are the same as your ordinary income taxes, and this is just a chart with an example of how it works. So 10%, 12%, 22% tax rate. The range from 10 to 37. You can see single filer, marriage filing jointly, married filing separately, head of household. Right now, long-term capital gain rates. Let's talk about long-term capital gain rates. Before we get to this chart, let's look at this. Lower your tax liability with long-term gains. IRS allows for specific identification accounting for virtual currency tax laws. Different methods of specific ID accounting, such as FIFO, LIFO, HIFO, and minimization, adjusting the holding periods for tax laws. This is particularly useful because digital currencies are divisible into decimal accounts, unlike stocks. So what does this mean? This means you can prioritize making long-term trades whenever possible. This can often result in a lower tax liability on your tax return, although sometimes an individual's federal and state tax rates may actually make short-term gains advantageous. So this is another way you guys can lower your taxes by holding, your long-term gains, getting your long-term gains. The short-term gains, you can see that being taxed heavily. Your long-term gains, not as much, because you're holding them longer, right? So, guys, this is just what it's all about. But let's talk about how you guys can file for your crypto tax. How do you report your cryptos on your taxes, right? This is on the same website. Shout out to you guys. You guys broke it down, so I wanted to help you guys. So how to report your crypto on your taxes, filing form 8949, and more. All right, guys. Step one, you got to calculate your crypto gains and losses. All right, you calculate that. Right now, there's different applications, websites, things of that nature that can help with you calculating your crypto gains and losses. Even if you go to this website right here and you go ahead and click it, you see it'll redirect you on how to calculate it. And you guys can see a tax law includes the following information from your transaction history: amount and currency of the digital asset sold, fiat value at the time of acquisition, date of acquisition, fiat value at time of trade or sale, and date of sale. All right. So if you doing first in, first out, which is the FIFO, however you're going to pronounce the acronym. All right, assets acquired first are sold first, last in. This is the crypto tax accounting methods. Last in, first out. Assets acquired last or are sold first. Highest in, first out. Highest price assets are sold first. All right, and that's how you guys can go ahead. You can determine your capital gains and your crypto tax calculation. Example: so you bought one BTC for 30,000 including fees. Thus your cost basis for this lot of one BTC is 30,000. You sold this one BTC for 32,000 including the fees worth of LTC the next day. Thus the proceeds are 32,000. Subtract the cost basis of 30,000 from the proceeds of 32,000 and your gain is 2,000. This amount is subject to short-term capital gain tax and reported on your year's tax returns. More than a year later, you sold 32,000 LTC for 35,000 in dollars. Subtract the cost basis of 32,000 from the proceeds of 35,000 and your gain is 3,000. The amount is subject to long-term capital gains and reported on tax returns of the year in which it was sold. So very, very simple that you guys can go ahead and calculate and determine, right? So imagine if instead of 32,000 LTC being sold at a gain, it was sold at a loss. That tax year you engaged in other trading that resulted in cumulative long-term gains of 50,000. You sell 32,000 LTC for 25,000, including the fees. The proceeds are thus 25,000. Subtract the cost of 32,000 from the proceeds of 25,000 for a net loss of 7,000. Subtract your long-term capital of 7,000 from your long-term capital gains of 50,000. Your new taxable long-term gains amount is 43,000, guys. All right, so that's how you guys are going to be able to calculate and be able to see your capital gain loss and your gains. You'll base it on that and go ahead and calculate it, and you'll be able to make sense of what you have. All right, so you calculate step one. You calculate your crypto gains and losses. All right, fill out form 8949. Report your totals from form 8949 on form schedule D. Report any ordinary crypto taxable income on the 1040 schedule 1 unless your earnings are from self-employment. In this case, use schedule C. 5. Complete the rest of your tax return, file and pay your taxes. While there may be only 5 tax listed, don't be fooled. Each one of those take quite a lot of time and energy depending on the volume of your transaction, whether you use crypto tax software, and the completeness of your record keeping, guys. Like I said before, guys, this is something that's going to be tedious. There's other softwares, websites, apps that can help you calculate. You guys can do that, but you guys got to always keep everything recorded, written down. Keep those transactions, keep all those information. Don't lose it. Don't lose track of what's happening, what you're doing in your crypto, your assets in crypto. All right, so we already went through step 1. You guys see it right here. They're just breaking it down for you guys right here. Calculate your total gains and losses. So it's every time you guys sell, trade, swap, or dispose of digital currency, you experience a crypto taxable event and therefore realize a capital gain or loss, right? So the form 8949. The form 8949 is the tax form used to report cryptocurrency gains and losses. Each sale of the crypto during the tax year is reported on the 8949. So here's the 8949 instructions. First, you need to fill out initial form at the top of the tax form 8949 for the short-term trade section. You will need to select check box A, B, or C in part 1. Short-term transaction reported on form 1099B, showing basis was reported to the IRS. Short-term transaction reported on forms 1099B, showing basis wasn't reported to the IRS. Short-term transaction not reported to you on form 1099B. All right, you will most likely check box C, as exchanges typically do not provide crypto form 1099. However, if an exchange has provided you a 1099, you will want to check Act A or B. You want to check A or B. I'm sorry, not Act A, but A or B. Right. You will then need to organize your calculations calculations row by row, including details of each transaction. Right. Description of property, date acquired, date sold or disposed of, proceeds, cost basis, adjustment if any to gain or loss, adjustment if any to gain or loss, or gain or loss, right? And this is the form 1099 form, guys. You guys can see right here. They said most of the time you're gonna check C, box C, but if you guys, like it says above, if certain exchanges do not provide crypto form 1099, but if yours does provide a 1099, you're going to check either A or B. Right? All right, so next you need to include your total and aggregate boxes at the bottom of the form, total proceeds, total cost of basis, total adjustment if any. Typically you will not have any adjustments. If you do have an adjustment, the total will be reported here without any accompanying description. Total gain or loss, the sum of your transaction, capital gains or losses. All right. Afterwards, you repeat the same steps to populate information for your long-term trades in part 2 of form 8949. All right. So include form 8949 with the form 1040 schedule D, and report your crypto income. Right, is reported. So although crypto profit is often reported as capital gains, there are instances where it is recognized as ordinary income. These include crypto mining, staking, hard forks, and airdrops, and crypto lending interest. This crypto income is reported on form 1040 schedule 1. At the top of the form, it asks, at any time during 2021 did you receive, sell, exchange, or otherwise dispose of any financial interest in any virtual currency? This was a slight tweak from the language on 2020 form 1040, which asks, at any time during 2020 did you receive, sell, or otherwise acquire any financial interest in any virtual currency. All right, so total crypto income that you receive personally is included in the form 1040 schedule 1. Additional income adjustments to income on line 8, other income. So you guys can see here. Okay. Self-employment income on form 1040 schedule C. If you are self-employed, if you conduct business as a sole proprietor, independent contractor, member of partnership, or otherwise conducting business for yourself, many crypto miners are considered self-employed. If you're self-employed, then instead of reporting income on form 1040 schedule 1, you will need to put that income on form 1040 schedule C and pay self-employment tax. Self-employment tax accounts for the Social Security, Medicare taxes usually withheld from employee paychecks. All right, you must be able to deduct expenses from your self-employment income. For example, it's possible to deduct crypto mining expenses like your equipment and electricity bill if metered separately. You may also be able to deduct expenses if you use your home for this hypothetical mining operation. You devoted a whole spare room to the mining rigs. In this case, you can refer to form 8829, expenses for business use of your home. All right, complete your return. At this point, you complete your cryptocurrency tax reporting. Once you complete the rest of your taxes, your crypto tax accountant will be ready to file, and you can pay your taxes. Simple as that, guys. All right, so hopefully you guys learned a lot from this video. If you guys want to go ahead and look at this for your guys self to get a better understanding, we didn't dive too deep. I want to give you guys the basis overall. Very simple. Most of you guys know how to file taxes, but you want to apply that but with cryptocurrency. And so hopefully you guys understood from this article what it's about. So I'll leave this link in the description below to go to both of these so you guys can go ahead and check them out yourselves. So thank you guys so much for watching. Leave a like, comment, and subscribe. Road to 1,000 subscribers. Peace. I'm out.